welcome to my morning report. Charles Fraser on Thursday, the 14th of September, with me, Richard Perry, market analyst at Hantec Markets. Bit of a consolidation open today, certainly on the Forex markets anyway. And this is coming ahead of two key events today. You've got the Bank of England and also US inflation. And both those factors, I think, are sort of playing into the fact that Forex markets are basically flat on the day, not really much doing. It's interesting that we saw a big rally on the dollar yesterday. Again, it looked as though that the dollar was sort of tailing off early on in the session, but then later on in the afternoon we had this suggestion from the Republicans that they are sort of formulating this tax plan that is going to be a move that, if it does actually come through for the Republicans, could potentially strike a dollar rally. And not only that, we've got the US inflation data today, which again is another aspect of something that could drive the dollar higher in the coming weeks. So this is why we saw the dollar rallying yesterday. Now look at the treasury yields. 10-year back to that downtrend, around 2.2%. 2-year has actually broken out of what would be an equivalent downtrend. I haven't drawn it in on that one. And also the 2-10 spread is widening as well, so that has helped to support the dollar, but it's at a key level on several of these markets really. Certainly dollar yen is sort of not a million miles off a key level, as is the euro. And yeah, it's interesting that we've seen this dollar recovery continuing yesterday, but just stalling a little bit in front of US inflation today, and that's sort of helping to stabilise the markets. In equities are slightly lower, a little bit of sort of caution as you get further rhetoric out from North Korea, well, which is tantamount to a threat to Japan, saying it wants to put it in the sea, and it's not great. But certainly equity markets a little bit cautious, but also we've got cautious equity markets on the fact that we had Chinese economic data out overnight, which missed estimates across the board. We saw fixed asset investment, we saw industrial output, and we saw retail sales all missing expectations there. And that sort of had led to a little bit of a risk off, and the mining stocks specifically are lower today. Now, what are we seeing that's going to be driving the market today? Well, as I said, we've got Bank of England at 12 o'clock, and we've got US inflation at 1:30. Now, Bank of England, not expected to move on rates. Where is it? Not expected to move on rates. 0.25% on the base rate, and also quantitative easing not expected to change. However, the voting makeup could change. Now we've got two dissenting voters at the moment, two dissenting hawks. Could they be joined by a third, Andy Haldane? Could he switch allegiance and vote for a rate hike? If that were to be the case, then you could see easily a sterling rally. Also, how hawkish will the statement be? We've got inflation that's coming up towards not a million miles off 3% now. Will that be accounted for in the statement today? So two aspects there for the Bank of England there to look out for. In terms of inflation for the US, it's expected to tick higher, mildly higher on the year on year to 1.8%, but mildly down on the core. Now, what we have got, if I can find it, there we go, is inflation charts falling throughout 2017 on the core, falling throughout 2017 on the headline. So you need to see inflation certainly picking up if the market is going to start to factor in possibility of a rate hike in December, because at the moment it isn't factoring that in. So key drivers today, inflation and Bank of England. Now, my chart of the day is the French index, the French CAC 40. Now, what we have seen is this French index, which has been in a downtrend, but this downtrend has now been broken by the price action of the past week. We've also seen a small head and shoulders reversal, that you sort of measure that from 5150 down to 4995. That's what, 150, 160 ticks of rally, and you could certainly see the market coming up towards 5300 in that case. Now, the key resistance on this chart is 5260, basically 5259. But look at this old pivot. Previously supportive around 5229. and then became resistance. So that got tested yesterday, almost. If I can get the crosshair on it, which I can't, which is annoying. Got tested yesterday, but it's just mildly unwound a bit today, but it's still in play. Look at these momentum indicators. RSI above 60. That's not been seen since May. Stochastics above 80. That's again not been seen since May. And also the MACD lines looking to turn positive. So this is an improving chart, and if it can break through to 5229 towards 5260, that resistance, that would certainly be a bull breakout. And that would sort of reopen to the next resistance, which is the June high, 5340. But as I said, that little head and shoulders reversal pattern gives you a 5300 target. So there are upside targets that are beginning to form on this French index. So you could see this rally, recovery continuing if you can break through this resistance. So near term, you've got the market supported around 5200, 5180. As that near-term breakout, and then 5163. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.